Jean Pisani-Ferry, director of the Bruegel Research Institute, joins us live from Brussels now. Lovely to have you on the program, Mr. Ferry. So let me start by getting your reaction to the deal, the agreement that we have on the table here, because at the end of the day, there's no new money being pledged. It's just the two existing funds, the permanent and temporary rescue funds, are going to be combined. So is it going to be enough to get the IMF to do more?
There's no new money on top of what was already announced. The only thing is that this money is going to be available sooner, which is in itself good news. Now, I share the concern that it might not be enough to both to impress markets sufficiently and in view of what could be necessary, and also, most importantly, in view of what IMF and emerging countries said, and the US said they thought was necessary.
So are you confident that emerging market countries, Russia, China, India, can be persuaded to contribute more to the IMF?
This I don't know. This will be certainly at the core of the discussion in the spring meetings. There are allusions that they will request more in terms of governance weight in the international financial institutions, although, I mean, the two issues have nothing to do, obviously, in principle, but in terms of bargaining, we'll see as it stands.
I suppose the real disappointment was the fact that the current fund didn't include the 240 billion euros of unused funds from the EFSF. Is that going to irritate G20 leaders to an extent? Again, we go back to this feeling of why should we step in and help Europe if they're not doing enough to help themselves?
The disappointment is not that it's not included. In fact, it is included temporarily. There was a proposal for a compromise to have it available if necessary, by requesting a decision, requiring a specific decision to have it available if necessary. So to have it in sort of as a reserve. And this was put aside. So it's in this respect, it's a disappointment. So there was a compromise position possible.
So how do you weigh all this up at the end of the day, Jean? Can we call this progress in terms of moving towards fiscal union, or are we moving away from it?
Well, whatever the size, certainly there is a major change in the fact that there is now permanently a mechanism in place to assist countries in difficulty, to contribute to the recapitalization of banks through lending to countries, to intervene in the market. So the FSF initially was considered as something that was supposed to last for 1 or 2 years and then disappear. Now we have a permanent mechanism in place. We have an institution that is going to be built. So it is a significant change in the governance. And also it means that monetary union is more than the old-style, bare-bone monetary plus fiscal system, that now it involves some sort of assistance mechanism that it may involve more in other fields. So this whole the question of in what direction is monetary union evolving?
Okay, so tell me a little bit more about that then, because do you envisage domestic opposition in countries like Finland and Germany to perhaps be an obstacle in the institution building that you describe?
Well, the ESM is going to include as a rule for decision a supermajority, but not unanimity anymore. So all the problem there were a year back with the Finnish minority party not agreeing to a rescue package, now it's not possible anymore. It requires a significant majority of Euro area countries to take a decision, but not in unanimity.
We have a relative calm in bond markets right now, don't we? Do things need to get worse? Do we need to see some sort of deterioration in, say, borrowing costs for weaker Eurozone countries before we can get more progress on fiscal integration?
I wouldn't wish to see it happening. I think fiscal integration, now we have this step, this fiscal treaty. We're going to see what happens. I think a lot will depend on the discussion that are going to take place immediately, I suppose, after the French election, on this fiscal treaty, on what could be, the following steps, where the major countries want to bring economic and monetary union, whether they want to stay with EMU as it is, or whether they want to contemplate further integration in certain fields. I would say fiscal union, I would say also banking union, because this crisis has also shown that the perverse relationship between banks and sovereigns is a source of fragility. And so one way to break it would be to build a banking union with common supervision and with a common rescue fund.